All right, so everything now we're going to revolve back to bank activities. So if you don't have cash in your warehouse or your job, your headquarters, you're probably going to put it in the bank. That's the smart thing to do. So let's talk about internal controls for banking activities. So let's first talk about basic banking services. A bank account is a record set up by the bank for its customers. They keep up with the money coming in and the money going out. It's a place, I guess you would say, to keep your money, but your money's actually not there. It's being loaned out in some capacity, but it's where you would keep your money in theory. Common internal controls for banking. These are just basic ones. So I want to limit access to making all persons authorized to write checks sign a signature authorization card. I want to make sure whoever has the ability to sign my cards also has a signature authorization card at the bank. That lets the bank know if it's being forged or not. That's a great way to make sure somebody's not stealing your checks and just signing your name for you. Also, each bank deposit must be supported by a bank deposit ticket. Why? What's on a bank deposit ticket? Pre-numbered. Again, we want to create that paper trail of linking numbers to checks and whatnot. Another thing that we want to do or talk about is electronic fund transfers, or EFTs. And these are the electronic communication transfers of cash from one party to the next or to another. So it's not me physically handing cash to you, but maybe me wiring transferring you cash, or me using a debit card or ATM card, or using direct pay online or something like that. That's what EFTs are. So that adds a whole new layer of internal controls, keeping up with your passwords and making sure it can't be hacked into or broken into. Be mindful of that, especially as new technology comes out into play, where EFTs become more and more predominant, much like they are now. So that's internal controls for banking activities. Thank you.